This stock had one of the most insane pump and dump moves I've seen. Bitmain Immersion Technologies went from $5 to $75 back in July of 2025. That's a 1500% spike, but here's what happened next. Over the past 7 to 8 months, it's crashed all the way back down to $26. That's a 65% collapse from the peak, and it's been a slow, painful grind lower. In the next few minutes, I'm going to break down this entire cycle and show you what happens after the pump ends. Alright, so what we're looking at is Bitcoin Immersion Technologies, ticker symbol BMNR on the daily time frame. This is a Bitcoin mining infrastructure company. Before we dive in, quick disclaimer, I'm not a financial advisor. This is not financial advice. This is purely educational technical analysis. Current price is at $26.70, down almost 10% today. Volume is at 58.39 million shares. What's important here is understanding the full story of what happened and where we might be headed. Let me walk you through the complete timeline because this is a perfect case study of what happens after a pump and dump and why you never want to be holding the bag. If you look at the left side of the chart going back to September of 2024, Bitcoin was trading in a boring range between $5 and $10 for months. From September through May of 2025, this stock did absolutely nothing. It was dead money. You can see the red line, which is the 50-day exponential moving average, currently at $32.63, and the purple line is the 200-day EMA at $32.88. Back during that consolidation period, both moving averages were basically flat. The stock actually drifted down from around $10 in September all the way down to about $5 by May. This was a slow grinding decline over 8 months with very low volume. Nobody was paying attention, nobody cared about this stock. Then in late June of 2025, something changed. Look at this first spike. We went from around $5 up to about $25 in just a few days. That's already a 400% move. But notice what happened next. It immediately pulled back to around $15. This was the warning shot that most people ignored. After chopping around for just a couple weeks in that $15 to $25 range, look what happened in late July. This is where the real pump happened. We got an absolutely monstrous parabolic spike that took price from around $25 all the way up to $75.66. That's the all-time high marked on the right side of the chart. This spike to $75 happened in just days, and that was the trap. That was the moment when everyone who was going to lose money bought in. They saw it up 1,000% and thought it was going to $100 or more. But look what happened immediately after hitting 75. We didn't get a slow rollover, we got an instant brutal crash. Within days, the stock collapsed from 75 back down to around $35. That's a 50% drop in less than a week. Massive red candles with huge volume. This is the distribution phase where the pumpers sold everything to retail bag holders. Now, here's the important part. That crash happened back in late July, early August of 2025. That was 7 to 8 months ago. And look at what's happened since then. From August through today, we've been in a slow, grinding, painful downtrend. This isn't a quick crash anymore. This is death by 1,000 cuts. Look at the price action over these past months. In August, we bounced back up to around $65. People thought, okay, the dip is over, time to buy back in. Wrong. That bounce failed and we rolled over. September and October, we made another lower high around $50. Again, people tried to catch the bottom. Again, they got trapped. November and December, we made another lower high around $40. The pattern keeps repeating. Every bounce gets sold into, every rally fails, and now here we are in late January 2026, sitting at 2670. We've been grinding in this $26 to $35 range for the past couple months. Each week, a little lower, each bounce a little weaker. This is what the aftermath of a pump and dump looks like. It's not a quick crash and recovery. It's months and months of slow bleeding as bag holders finally give up, as hope turns to capitulation, as each bounce attempt fails. So let's talk about what the chart is telling us right now, 7 to 8 months after the pump. First, look at the moving averages. The 50 EMA in red is at 32.63. The 200 EMA in purple is at 32.88. Both are pointing downward now, confirming this downtrend. Price has been below both moving averages since October. That's 3 months of trading below the key moving averages. This is a confirmed bearish trend. Second, look at all these horizontal resistance levels marked in blue: $34, $39, $49, $59, $65. These were all support levels on the way up during the pump. Now they're all resistance on the way down. A classic role reversal. Every one of these levels has rejected price multiple times over the past few months. Third, we're currently sitting right on this dotted support line around 26 to $27. This level has held for the past several weeks. It's the current floor, but here's the thing, we've been testing it over and over. Each test weaken support, and today we're down another 10%, testing it again. Fourth, if you look below, there are support levels marked at 26.42, 25.99, 19.16, 15.21, and all the way down at 5.21. That $5 level is where this whole pump started back in May of 2025. A full retracement would take us right back there. Now look at the volume over time. During the July pump, massive volume, but since then, over these 7 to 8 months, volume has been steadily declining. You can see the volume bars getting smaller and smaller. This tells us interest is fading, the hype is dead, fewer and fewer people care about this stock anymore. This is actually typical for pump and dumps. The volume spike happens during the pump, then volume slowly dies as people lose interest and move on to the next shiny object. So what are the scenarios from here? 7 to 8 months into this decline. Scenario 1, final capitulation. We break below $26 and see one last flush down to the $15 to $20 range, or even all the way back to $5 to $10 where this started. This would be the final bag holders giving up. Volume would spike on this move as people just want out at any price. Then and only then could we potentially form a real bottom. Scenario 2, long term base building. We hold this 26 to 27 area and spend the next several months, maybe 6 months to a year, just consolidating sideways. Volume continues to dry up. The stock becomes boring again. Nobody talks about it. And eventually, maybe it sets up for a legitimate move based on actual fundamentals, not pump and dump hype. Scenario 3, slow grind lower. We don't get a capitulation flush, we just keep slowly grinding down, making lower lows every few weeks. 26 becomes 22, 22 becomes 18, 18 becomes 15, death by 1,000 cuts continues for another 6 to 12 months until we're back at pre-pump levels. Of these three scenarios, historically, scenario 3 is most common. Slow, painful grind, lower over many months or even years. The key levels to watch are 26 to $27 as current support. If this breaks with volume, we're likely headed to 20 or lower. 32 to $34 at the moving averages as major resistance. We'd need to reclaim this level and hold it for weeks to even think about a trend change, and $5 to $10 as the ultimate destination if we get a full retracement back to pre-pump levels. Now let's talk about what happened here fundamentally. Bitmine Immersion Technologies is a Bitcoin mining company that makes immersion cooling technology. Back in July of 2025, Bitcoin was rallying, mining stocks were hot, and this small cap got caught up in a pump scheme. Whether it was organized groups, social media hype, or just momentum traders piling in, the result was the same: a vertical move on massive volume with no real fundamental justification for a 1500% gain in weeks. The smart money bought at $5 to $8 back in May and June when nobody cared. They sold at 50, 60, $70 into the euphoria. The dumb money, the retail FOMO crowd, bought at 40, 50, $60 thinking it would go to 100. They're still holding, still hoping, still bleeding. 7 to 8 months later, those bag holders are now down 60 to 70%. Some have given up and sold at a loss. Others are still holding, hoping it comes back. But look at the chart. Every bounce has failed for 8 months straight. The trend is clearly down. Hope is not a strategy. So here's my take after watching this unfold for 8 months. If you got caught in this back in July and you're still holding, you need to be honest with yourself. Are you holding because you believe this company will actually recover and justify a higher price? Or are you holding because you can't accept the loss and you're just hoping? After 8 months of lower highs and lower lows, the trend has spoken. This isn't a dip to buy, this is a downtrend. And downtrends can last for years. If you're thinking about buying here at 26 because it's down 65% from the highs, understand what you're doing. You're trying to catch a falling knife that's been falling for 8 months. Sure, you might get a bounce to 30 or 32, but then what? It's been rejected at those levels multiple times. What I'm watching is simple: can $26 hold, and can we see several weeks of sideways consolidation with decreasing volume? That would be the first sign of potential bottoming. But even then, you'd want to wait for a break back above the moving averages at 32 to 34 before considering this might be changing trend. Any daily close below $25 opens the door to 20, then 15, and honestly a full retracement to $5 to $10 wouldn't surprise me at all. That's where the pump started, and that's often where they end. The lesson here is about time frame and patience. If you got caught in a pump and dump, it doesn't just bounce back next week. It can take years to recover, if it ever does. Most don't. Look at this chart: 8 months of decline, 8 months of failed bounces, 8 months of bag holders slowly giving up. This is the reality of what happens after the pump ends. The people who made money bought at $5 when it was boring and sold at 60 or 70 into the hype. The people who lost money bought at 50, 60, 70 because of FOMO and are still holding 8 months later down 65%. Don't be the exit liquidity, don't chase pumps. And if you do get caught, don't hold and hope for months and years. Sometimes the best trade is admitting you were wrong, taking the loss, and moving your capital to better opportunities. The market will always give us new chances, but only if we have capital left to deploy. Holding a bag for 8 months, 12 months, 2 years, that's dead money that could be making returns elsewhere. If you found this case study helpful, hit that like button. This is real education about what actually happens after the pump ends. Subscribe for more honest technical analysis that shows you both sides, the good and the ugly. Drop a comment and let me know. Have you ever held a stock through a long decline like this? What did you learn? At what point do you cut losses and move on? Thanks for watching. Protect your capital, stay disciplined, and I'll see you in the next video.